Good afternoon, everyone. This is Ben Jackson with the IPA. I see that we have people joining, so I'm going to give folks just a minute or two to get into the webinar, and then we will get started. And it looks like we still have a few folks coming in, so bear with us here for a moment.
And is it traditional to do weather chat at the beginning of webinars while people are joining?
Perhaps we should, but I imagine it's very different where you are than where I am.
True.
So I'm going to go ahead and get started and introduce our speaker. We are joined today by Alison Donnelly, the head of payments at fscom, which is based in Belfast. So she is staying up late to join us today, and we appreciate that very much. And Allison is a payments policy expert. She has a lot of knowledge on this. She comes very highly recommended to us, and so I'm excited to get a chance to talk with her. She's a former regulator. We won't hold that against her, but she worked with the Financial Services slash Financial Conduct Authority in the UK. It's sort of changed its name over time. And then she is also a leader at the Payments Association Regulatory Working Group, which is kind of like the IPA in that it engages with regulatory bodies to create sort of more fair regulations for the industry. And then you're also an ambassador for the Fintech corridor, which is the corridor between Belfast and Dublin. And I am just going to ask you, what is that exactly? Tell us a little bit more before we get started here.
Oh, I'd love to. Yes. So the FinTech corridor is set up to promote FinTech on the island of Ireland, but we're looking at having two capitals on the island, one of which is in the UK and one of which is still in the EEA. And so it creates a lovely dynamic. And, as we talk through the questions that we're going to talk through later, I'll be talking to you about where the Ireland, UK, EEA dynamic works out. But Dublin to Belfast is a great place to locate your business if you're looking to move into the European market.
Fantastic. And so we'll talk, I want to talk a little bit more about why that is, but I do want to make a couple of quick housekeeping announcements. We are recording this, and we encourage questions. We certainly want them. We'll probably pick them up at the end, but certainly we encourage you to put them into the Q&A box, which should be at the bottom of your screen as they occur to you. It's always good to sort of get those thoughts out, and we'll address them, and we welcome the conversation. That is the way that we learn the most, is from people kind of telling us what's on their mind. And so with that, then I want to start with just what does the European market look like? And you guys have a diverse, you have a competitive payment sector. So what does that sector look like? What do payments look like in Europe?
I'd say the European fintech sector is very vibrant and innovative. Look, it's clearly still smaller than the US market, but it's growing rapidly and indeed closing the gaps in some areas. In the UK alone, there are over 1,200 non-bank payment service providers. That number's gone up and down over the years, but it's largely been in around that ballpark. In the EEA, there are hubs in Ireland, as I kind of alluded to earlier, the Netherlands, Lithuania, Malta, and Poland. And now banks still dominate the payments landscape in terms of volume and value. But we're talking in the sort of comparison figures of 400 billion euros annually to tens of trillions of euros in payments value. But the non-bank sector has seen rapid growth, especially card payments, e-money transactions, and cross-border services. And that growth is largely attributed to the Payment Service Directive, the regulatory framework that was put in place in the early began being conceived in the early 2000s and has evolved more recently to include the open banking sector.
So I want to put a fine point on one thing here. When you say EA, what does that mean as opposed to, say, the EU, the European Union?
Yes, so the EA is the European Union plus three other states. So the single market covers the whole of the EEA. So that's to make the distinction. Obviously, everybody knows about the UK taking the decision to leave uh, Brexit, as it were. And so we now have a situation that to serve the vast majority of Europe, firms need to go to somewhere in the EEA to get authorized. And they probably will also take a UK authorization because of the market. Just it's a, it's a big market in the UK. Consumers are very interested and willing to adapt and adopt new technology and new payment methods. So it's a good market to be in.
And is that why Ireland is a good place to start if you want to come to Europe with your business?
It is definitely a good location to go to. For the American market, it is one of the first places of interest. Literally, it's one of the first places you can get to, and because of the English language and common law, which brings commonalities with the UK, those factors are appealing. So there's a lot of American firms that have established in uh, Dublin for that purpose.
Okay. And then let's talk a little bit about the non-bank players because that's kind of this webinar and this idea got started because we're starting to see a lot of interest in alternate kinds of charters or non-banking kind of charters in the US. There have been some that have been issued to create sort of crypto custodians. There's an innovation charter in Connecticut. There's an acquiring charter in Georgia. Who are the non-bank players then in the in the EA that we're talking about here?
Okay. Generally, mainly they are payment institutions and e-money institutions. So for the time being, we have these two separate classifications. I like to see it as this bit of a sort of pyramid, with the top goal for nearly every business is to be able to become a credit institution. That's the best, the ideal. But it comes with the obligations of having much greater capital requirements, way more supervision, a lot more constraints. But in turn, you can do a lot more with the money that comes into your possession because it's deposits and it can be lent against. Whereas the non-bank players are a step down. So e-money institution, you can hold funds on account. It can be almost look like a bank account in that you can have direct debit set up. You can have a card. You can use it for your day-to-day living expenses. So that's very appealing. But of course, the e-money institution is not allowed to lend against those funds. So that's the limitation. And then a sort of slightly maybe lower grade is the payment institution. The capital requirements, certainly at the beginning of authorization, is lower than the starting point for the e-money institution. And the concept, certainly in the UK, albeit slightly different in the EA, the concept of the payment institution is that the funds come in and they go out. It's purely for making payments. So that sort of being able to hold funds on account isn't something that's allowable in the UK. And that therein lies a sort of interesting point about the EA and these directives. Whilst the directives were meant to bring in commonality, and they certainly do that in many respects, uh, regulators and governments are still made up of people, and people like to do things differently. So there's still plenty of opportunity for differences. And one of the differences is that the UK has a particular view of e-money and payment institutions that isn't necessarily shared by other EEA states. Uh, it, it, it's relatively easily navigated, but you just need to know enough to know that you have to navigate it.
And can you tell us the names of some of the big companies that are doing these kinds of things?
Yeah, of course. Um, I'll start with money remitters because they're probably the more traditional. So the US NASDAQ listed company Remitly, as you know, offers international money transfers to over 170 countries. It's authorized in the UK as a payment institution and has been in the UK since 2016. They also have an authorization in Ireland and have been there since 2019. So you know what money remitters do, and that's Remitly is a good example. Perhaps more in the sort of still in the traditional sort of corporate payments, the FX world, there's a company, Corpay. It's a global S&P 500 corporate payments company, helps businesses and consumers pay their expenses. Um, they're very acquisitive. They have bought lots of UK businesses, in fact, and the predecessor FleetCor bought Cambridge Mercantile, which also bought Allstar, Global Reach, Apex, and indeed today has announced the purchase of Alpha Group International PLC, a leading provider of business to business payments in the UK and Europe. So Corpay is an example of an e-money institution, and actually, in fact, collaboration of e-money institutions. And again, actually, they're a UK and Ireland uh, company as well. And to keep to the theme of UK and Ireland, I also pulled out marketplace providers. So lots of marketplaces blossoming in the digital world. TripAdvisor has established its own payment service provider. So it's called Oil Payments, authorized in the UK since I think it was 2022. And then in Ireland, just actually March of this year. So Oil Payment only serves the TripAdvisor groups, Viator and the like, but it provides payments purely for TripAdvisor.
Okay. And so you've got these different kinds of products and or rather companies offering different kinds of products. And some of them are, like you say, business to business is slightly different in that it's it's not direct to consumer. And when you're convincing a business to do something, that's one thing. But how do consumers look at these kinds of e-money products, and how do and what do the banks think about them, and what do the regulators think about them? I mean, obviously they authorize them, but now that they're actually working, what do the regulators think?
Yeah. So consumers have adopted payment and e-money institutions products. I started at the FSA back in 2010, and when they allocated me to the e-money policy, so like, what is this e-money? And it didn't feel like it was really for consumers like me. It was probably for those who wanted a basic, very basic bank account and were financially excluded and therefore couldn't get a bank account, or perhaps those who wanted to keep money aside for gambling. But and gaming is a big usage of payments and e-money. But over the course of the decade or so, it has become much more commonplace, and consumers are much more, the products have arisen that consumers want. I think probably a big influence in that was the firm Revolut. Uh, FScom supported Revolut to get its e-money authorization in the UK back in the day, and nearly everybody has a Revolut account. In fact, in Ireland, uh, it's a term, it's a verb. I'll Revolut you that money because it's just speedy payments. So it's become a lot more accessible, a lot more commonplace. Whether consumers really understand the distinction between an e-money institution and a bank, I'm not quite so convinced. And lots of arguments about whether consumers need to understand these things or not. I think they don't necessarily need to understand it, but certainly when things go wrong, that's when they definitely want to understand it because they want to understand why their money is not protected in the same way. And that is a big issue that definitely is one for everyone to address. Banks, on the other hand, there's plenty of discussion about, well, these non-bank players are going to unsettle and disrupt banks, and they're not going to like this. Actually, a lot of banks have found ways to work with fintechs because payment institutions, e-money institutions, still need access to the banking systems, the payment systems. And generally, they do that through banks. They need to safeguard their customers' funds in credit institutions, the banks. So we have a range of players who have specialized in supporting the sector. And it does take specialization because there are risks associated with the non-bank payment sector that you really need to understand and be able to manage, monitor, and over the course of the years, there's been appetite and then de-risking, appetite and de-risking. I'm sure you're familiar with that as well. Regulators, well, I'd have to say it definitely varies across Europe. Some for instance, the UK set itself up at the beginning as being very embracing and welcoming of the sector. And I would say that's why we have such a large sector in the UK, and why Brexit was actually quite interesting, because so many firms had maybe origins elsewhere in Europe, but they settled in the UK because they felt that the FCA had taken many, many steps to help the market understand and be welcomed. So they all then had to move elsewhere. So, but even the FCA has, over the course of time, really begun questioning the sector. They felt that there are very definite deficiencies. Safeguarding has not, which is the protection of the customer funds, has not been as secure as they wanted and expected. Firms have gone insolvent, and of course, particularly where they're serving consumers who or businesses who use their accounts as day-to-day transaction accounts, the inability to get access to the funds, to be able to move their money, and indeed potentially lose the funds altogether, is has very serious implications, particularly if you're dealing with financially excluded consumers. So across Europe, there's different focus, different areas where regulators are more concerned about. But generally, there has been enough support for the sector for it to grow, as I mentioned at the outset.
So is the regulation then generally perceived as being lighter on these institutions than it is on the banks?
Very much so. Very, very much so. And primarily because they're not lending from the funds, and therefore, and so the whole point was that whilst the conduct of business rules are the same, so if you have an unauthorized transaction with a bank or an authorized transaction with an e-money institution, it's the same rules. You should be, as a consumer, you're entitled to the same redress. Conduct requirements are similar, but the prudential requirements are miles apart. If your money is safely tucked up in a bank, there's a deposit guarantee scheme. So up to £85,000, you should be guaranteed that the money will be returned to you pretty quickly if that bank goes insolvent. Whereas that is very definitely not the case for consumers who use payment and e-money institutions. And unfortunately, in the UK, we've got a number of examples where customers have lost their money because controls just were not there, and there was a gap in the amount that was safeguarded.
So can I get you to expand on that a little bit? In the US, right, we have the Federal Deposit Insurance Corporation, and if a bank fails, and this is very specific, if the bank fails, a depositor's money is secure. If a fintech fails, the money is supposed to be secure as long as it's held in a bank. Now, there have been some issues around that because being able to account for all of the funds and where they should be has been a question. But you have multiple jurisdictions across Europe, and I imagine you have multiple approaches to sort of securing that money in the bank. But is there something similar in the way that the e-money licensees, the holders of the licenses, secure their customers' money in conjunction with the banks?
That issue sounds exactly the same. So with similar setup, money in banks, deposits for covered by the deposit guarantee scheme, however that looks in each state, but that's like an insurance, isn't it? Bank defaults, you get your money repaid in however many days or weeks. For e-money institutions, we'll take them as an example, they should be holding their funds in a bank account, or they can hold it in secure liquid assets, or indeed they can get an insurance to cover. But if they're holding it in a bank, the money should be there, right? But the whole point of payment is that it's a movement, it's dynamic. And
Right.
so you have plenty of opportunity where the funds have left one account, haven't quite been received by the recipient, perhaps, or indeed, if we're relying on people to make sure that the money is in the safeguarding account, then safeguarding is only ever as good as on the day that you go bust and people dip into that account on that day. Have they been dipping into it for many days previously to pay the bill? And we said we weren't going to talk politics, and we're definitely not going to do that. But the tariffs and the uncertainty that created very recently for currency fluctuations in what were considered be safe haven currencies, of course, created for those firms that do FX in a big way, and certainly sort of forwards and the like, that called on their liquidity reserves. And so you can see that without as much oversight on the firms, certainly in the UK, you're supervised as part of a huge portfolio of 1,200 firms. You don't have a named supervisor, so there's nobody checking up on you on a day-to-day or week-to-week basis. You may not have spoken to the regulator for the last couple of years, so that oversight's just not the same. And that's where problems can arise.
Okay. So then let's talk about what it takes to get authorized. How do you get an e-money license, for example?
So the directive is specific about what needs to go in the application pack and how long regulators have to review the pack. So there's a list of requirements, and that includes information about the organization of the business, governance processes, who the key people are, both who run the business and the people who own the business. You need to provide information to show that you're going to safeguard, you're going to have regulatory capital, your mind and management, the people who run the business are in country, that you're going to make sure that you have systems and controls to detect and deter financial crime, that the funds, that the systems, the IT systems that you have in place are secure and properly documented, that there's strong customer authentication and the like. So you provide all that information in, then the regulator has 3 months to assess your application if it's a complete application, and up to a year if it is an incomplete application. And you say to me, well, what is a complete application? And everybody scratches their heads. So that's a very good question. Really, a complete application is one where the person reviewing it was able to generate no questions, and all good people are able to generate questions. So that, what is a complete application? That's probably not really such a thing.
And then to come back around, we did say we weren't going to talk politics, but how did Brexit impact the market for e-money licensees and for new entrances?
So the value of the directives was that it created this single market where you could get authorized in one jurisdiction and passport out to the rest of the EEA. And like I said earlier, quite a lot of firms chose to go to the UK because the FCA was regarded as very receptive and warm and keen to help and clear about what they were expecting. So when Brexit crystallized, firms had to get another authorization if they wanted to continue to operate either in the EEA or in the UK. And so they had to duplicate, because every regulator wants to know that if this business, if something goes wrong in it, that they are able to go and stare you in the eyes, right? They want to be able to see you, they want to talk to you. And so you need to have a presence sufficient in that country that they would be able to do that. And so for firms in this situation, they had to double up. They had to have another entity with another set of senior people, another set of processes, more capital requirement, more bank accounts to safeguard the funds. So it's really a duplication effort. Um, and firms have done that, and by and large, some have chosen not to do it, but I would say probably the vast majority have gone with the duplication. And at the moment, the regimes are still really quite similar, but there is every potential that over the course of time there will be divergence between the UK and the EA, because people will take the opportunity to do things slightly better for their own country and their own people. So it could be a little bit more complicated going forward.
So I want to ask another question before we open it up to the audience a little bit. Well, two more. The first is, have any of these e-money license holders ever said, I'm just going to become a bank. I'm just going to finish the process and get a full-on banking charter?
Yes, absolutely. Revolut is a very good example. After many years of applying, they finally got their authorization in the UK to be a bank as well. And they have a banking license elsewhere. Um, there are other examples. I think probably every e-money institution toys with the idea at some point, but it is a huge step up in terms of expectation and capital and liquidity and the like. And so it takes time, it takes an awful lot of effort, and you need to be able to be sure of your numbers. You also need to actually just be really sure of your business case, because you do need to transition from uh, to being able to find the business case for why you need to lend from the funds and what you're going to do to justify being a bank.
And then when I introduced you, I briefly talked about you being with fscom. Tell us a little bit more about what fscom does in the payments ecosystem. Who are you working with? What kinds of things do you address? That kind of thing.
Thank you. Yes, we are compliance maturity specialists. So we have a team of uh, people who are specialized in payment services. Part of my team are auditors, and so they provide audits on financial crime, systems and controls, the safeguarding arrangements, and IT controls. The other part are advisors, and they help firms to get authorized, take them through the authorization process, and then help them to stay authorized by giving them the advice that they need to meet the regulatory requirements. Um, my team focuses on the UK. We also have a team that focuses on Europe. And, the FCA has certainly over the last number of months and years really started asking a lot more questions and being much more engaged with the sector. So there is a lot of effort that needs to go into managing regulatory change. And so we help firms understand what that is. We work with firms across the payment sector. So I've mentioned a few of them already this evening or today. Others include Currency Cloud, Airwallex, Soldo, businesses from the very small startup who are just getting in, launching and generating the business, to the ones that are much more mature and sophisticated and have been around for many years. It's a real pleasure to work with this sector. I'm sure you feel quite the same, seeing the innovation, seeing the dedication to improving the consumer experience. It's a joy to work with the sector.
And just because misery loves company, what kinds of problems do you run into most often that you're trying to solve with companies? What are they usually coming to you and saying, Alison, please help me?
Well, the sort of interesting, joyous ones are whenever they're looking to decide whether they need to be regulated or not. And unbelievably, there's ones that come very keen to be regulated and ones that come very keen not to be regulated. And working through what it is they want to achieve, looking at the various options, because it's not even if you want to get into the regulated activity, you don't necessarily need to get authorized. You could become an agent or a distributor of somebody else, use their license until you've built up your business. Or, there's partnerships. There's some interesting firms that are fintech. Uh, and indeed have authorization, but actually what they are is the front end, and they have a banking partner, Clearbank, who provides deposit accounts in the background directly to the customers, but through the interface of the fintech. So some of those models are just very interesting to be able to see them play out in real life. And of course, all the very interesting embedded finance as well. So that's some of the interesting problems. Some of the harder, more challenging ones are where firms are, working on the day-to-day of onboarding customers, improving the customer experience. But how do you make sure that you do what's right in terms of detecting and deterring financial crime? Um, we've had change in the UK about fraud, where authorized push payment scams, there is an obligation on the payment service provider if they didn't do enough to identify and stop fraud, that where customers have been scammed, they need to pay customers back, which, big liability shift. And we've been helping firms to work through what that means and how they can best plan and indeed mitigate the risk of that happening.
And as you kind of look at the industry as a whole, um, and all of the different things that you're seeing, are there any innovations that you would predict are going to be the next big thing or the next thing that will shift the market?
Well, there has been a lot of change and a lot of shifting. One thing we haven't really spoken about so far is open banking. It's not particularly new, of course, nowadays, but it's still waiting. I think just it feels like it's still on the cusp of coming the next big thing. So payment initiation and account information services, being able to move funds without actually touching funds, and the pulling of the account information and providing that in a much more user friendly and complex but interesting and a readable format to customers is very exciting. I think embedded finance, where um you're not consumers not thinking about the fact that they've made a payment. It's just been so integrated and easy from their perspective in the piece. The whole buy now, pay later piece, and earned wages, all very interesting in the market that it serves and making sure that it's putting in sufficient protection for consumers, but getting and that's always the balance everyone's trying to strike, is that the balance of making sure that consumers really understand what they're getting and the risks and limitations of what they're being offered, but still having a very achievable service.
Yeah, yeah. So let me pause here. Do we have any questions from the audience? Happy to take them in the chat. I see nothing. We've done a good job of explaining things so far. Um, but I am going to ask one more while I have you here because I have a view into the European market. What is the view there on the role of AI in financial services? Are you seeing people talk about that? Are they talking about how artificial intelligence is going to change things?
Absolutely. It's a big subject. There's a lot of effort and um, consideration going into how it can make processes easier. We've seen it used in probably relatively small ways so far, but with the possibility of it being very useful in terms of, document understanding and assessment and being able to for instance, where firms have a lot of distributors or agents, being able to assess, monitor, manage those material and management information much better. That all feels very useful and achieved. But of course, as we all know, the limitations with AI is the what the data in looks like, what the data lake looks like, and how useful it is. So I think there's still a long way to go to make sure that we get the best use out of it.
And where does cryptocurrency fit into the payment system there? I mean, there's a lot of talk about using stable coins or cryptocurrency to manage things like foreign exchange risk because it's instant settlement or it can be near instant settlement and it can eliminate some of that. Is that as big of a deal in a place where you have a common currency across so many countries, for example?
Certainly still a big issue and big area of focus, and indeed a very prime example of the regulatory divergence. And indeed, in the UK, the situation is where we have a very cautious regulator and a very limited appetite for crypto, but a government that is very committed to growth and innovation and sees crypto as being part of that. And in contrast, the EA has sort of pushed ahead with their MyCar and their crypto piece. So there's still definitely a lot of appetite for the developments. Uh, we're, but the regulation has probably been a little bit too slow in this instance.
And do you have any thoughts? Have you looked across a pond at the US market much? Do you have any thoughts? Should we create our own version of the e-money license? Or do you think we've got enough charters here already?
I think there's, from the European perspective, for my clients who are looking to go out to the US, the US is like an open territory. They want to go out, they want to experience, they want to do business, but it's super complicated, isn't it? And every state and every the difference there, and how to use the wide variety of banking partners. So I think there would be a lot of interest and appetite in anything that makes the process easier to open it up.
Well, Allison, this has been great. I don't see any questions from the audience, but I want to thank you very much for taking the time to talk with all of us about this. This has been a fascinating conversation, and we will definitely keep in touch with you and as things develop both here and in the US or in the EA.
Ben, thank you so much for the opportunity. It's been a pleasure, and I look forward to continuing partnership with you and your association members.
Great. Thank you so much. And thanks everyone for attending today.
Thank you. Thanks,
Thank
Brian.
you.
Stefan.